You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rocking tune means it is time once again for the Option Block, your bi-weekly choice for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the Options Insider Radio Network. And speaking of the network, if you haven't done so already, I encourage you, head on over to your app store of choice. Google Play App Store, of course, the iTunes App Store, even the Amazon App Store, and check out the Options Insider Radio Network mobile app. I think you're going to like it. You can, of course, get all of your favorite episodes of the Option Block, as well as every other program, over a dozen now that we do here on the Options Insider Radio Network. You could stream them. You could download them for offline listening. You can make comments. You can send in your tweets and your emails. A lot of great stuff you can do there with the old app. So check it out, the Options Insider Radio Network mobile app in your mobile app store of choice. All right, and kicking off the old show, we got a great panel for you. Starting off, well, I guess both of them are of equal proximity, so I'll go with the one who hasn't been here in a while. He is Mr. Mark Sebastian, dialing in from the Option Pit /Swan, the Option Pit World HQ and the Swan Satellite HQ here in Chicago. Right. Mr. Sebastian, welcome back to the show.
I like to consider us the Eastern Divisional Headquarters.
the EDQ.
That's us.
Or EDHQ. Is that kind of like
the Eastern Division? The Eastern Bloc headquarters.
Is that kind of like the Justice League?
Yeah, well, think of Durango as America and Chicago as the Soviet Union.
Meanwhile, back at the EDHQ.
I would say, you know what? I actually took a blue pill for my EDHQ.
Oh, well.
It helped.
Yes, I hear that does work wonders for all that kind of stuff. Just remember, you pay attention to the disclaimers. It can cause arrhythmia and all kinds of other fun stuff. So watch out for that.
But my P&L did rise.
Yeah, well... How long have you been sitting on that chestnut, sir?
I just came to you right now. I mean it.
A moment of inspiration. Well, we have them every now and then, and we were lucky enough to capture one here on the old Option Block. All right, also joining us and probably shaking his head saying, what have I gotten into, is none other than the Viceroy himself, good old Alex Jacobson, holding down the Options Express hot seat on the old All-Star panel. Mr. Viceroy, welcome back to the show, sir.
Hey, Mark, good to be here today, and I am now frightened after listening to Mr. Sebastian. So it should be an interesting hour.
Yes, you know what kind of death spiral we're all in store for here over the coming hour. So with that great tease in mind, we're going to dive right on into the trading block.
The trading block.
All right, you know what those bells mean. They mean it is time for the trading block, the portion of the show where we break down the day's worth of interesting activity on the old street. And it is February 13th if you're playing the home game, listeners. And it was a decent up day on the old street. Caught a bit of an updraft finally after some seesawing action over the past few sessions. Most of the major indices closing up, well, about 0.5% or so. S&P closing up 0.6 of a percentage point. And the Dow, a bit of a laggard, up actually a little less than 0.5 percentage point to 16,027. A lot of good stuff cooking. We also saw vol, not surprisingly, coming off a wee bit. VIX cash closing today at 14.16. Why don't we start there? As we are wont to do here on the old program. Senior Sebastian, in the midst of your frenzied overlaying for the Swan folks, what caught your eye in today's volatility movements?
Well, it was interesting. We started out really, really ugly. Today was a much more volatile day than people realize. We were down about $12 on the open, and we ended up 10.5 on the close. That's probably the main reason why the VIX isn't doing anything. I'm going to let Alex speak to this as well, but the VIX over the last couple of days has completely stopped falling. We've had the market move up over a 3-day period. We've had the market basically go from, let's call it 118.15 up to 30, and really the VIX hasn't done much. For the last call it 15 points, the VIX is basically flat, which knowing if you know anything about me, points toward the fact that the market is potentially starting to top out here. When you see the VIX rallying like that, and the S&P's rallying and the VIX really not doing much, that to me is never a good sign. Additionally, high realized volatility on a rally, and I know this doesn't involve views, but high realized volatility on a rally is to me never a good thing, and usually points toward more of a knee-jerk than any real logic to the rally.
I touched on the Swan thing at the top of the show. I'm not sure how many of our listeners are familiar with your new gig over there in addition to what you do over at Option Pit, but a lot of what you're doing over there right now is actually helping them construct a lot of overlays on their S&P 500 portfolios.
Yeah. Or we straight up construct it, the portfolio and the overlay.
Then you do two parts.
Time.
You do two parts.
That's our primary business is doing that.
But why don't you talk to our listeners a little bit about the challenges and maybe some of the opportunities you're seeing in this environment right now? Because you're right, you're seeing realized kind of outperforming implied. Aside from the fact that it kind of proves the value of having a good hedging strategy in this environment, does your marketing for you. But from an actual pure execution standpoint, you saw VIX kind of popping but underperforming to the upside and then coming off to the downside, and now maybe perhaps even underperforming a little bit there as well. How has that been for you in terms of actually being able to implement your tail risk, putting on these overlays? Has it been more of a challenge, a little bit easier than you thought?
Well, tail risk gets easier, but some of the income strategies we do to pay for our tail, when you get high realized volatility, it makes us have to work a lot harder. So we definitely are busy when we're definitely busier when the market's moving around like this. A slow market with not much going on is great. We managed to sell a bunch of our premium when the VIX is at 21, and the issue is that if you look at the speed and the swiftness of this rally, a 21 vol that is what keeps you from getting into trouble. There's just gamma is really the major risk right now. In a 2-week period, we've gone up and down 100 points. That's incredible.
So have you had to do things like migrating the writing portion of the overlay a little closer to the at-the-money, try to harvest a little more?
Migrating kind of things up. So it's just kind of getting out of the way. So as the market rallies, some of our stuff that's above the market, we're just buying and rolling up and buying just to make sure that we don't want to, we certainly don't want it in the money. We don't really want it at the money. We want to just stay out of the way and safe. We're definitely big proponents of not even, if I'm crossing the train tracks and I can even see the train, even if the gates aren't dinging, no way am I crossing. That's kind of our approach.
That's kind of true. You guys are in a little bit of a unique scenario. You can't really get called away, so you have to be a little bit more probably aggressive on the upside roll than other people would be.
Yes, that's exactly right.
And Mr. Alex, what really caught your eye now that you're back in the OX HQ proper and outside of the realm of Casa Jacobson with the ringing phones and clocks and whatnot? What caught your eye? Give us a little preview of the Express block here over there at OX.
It was a handful of names today, and some of them had surprisingly large moves, which I think speaks to the illiquidity and some of the fragmentation in this market. But stuff like Priceline today, I mean, the desk was busy all day, and some of these moves, I mean, the fact that we're seeing 8, 10, 12, 20% move speaks to, one, what a terrific time it is for the options market, but also I think it's a measure of still the lack of liquidity and thin markets. But today was busy. I mean, it was like textbook. Every day is Apple and Tesla, but today you had a handful of other names come in, and now Twitter and Facebook are almost becoming perennial everyday active traders as well.
It's going to get to the point where the Apple guys are going to start knocking on the door of all the brokerage firms saying, hey, you owe us a check for keeping you guys afloat over the past couple of years.
Paid a lot of bills the last 2 years, Apple has,
yes,
for the market-making community and for the brokerage community, and it continues to be just a favorite amongst the investor community.
Speaking of paying bills with Apple, we are now joined, better late than never, by good old Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome to the program, sir.
Always a pleasure to be here, especially when Apple has an $8 move in the day. It's always fun.
Yes, how was the BBI today, sir?
Closing out profits in a lot of situations. I was short some put spreads on SPY as a portion of the hedge, and I was actually, for probably the first half hour of the day today, I was in full, okay, I'm watching it, my fingers on the button mode, but the market rallied, so I didn't have to actually press the button. So this is kind of one of those situations to where I get paid to sweat, and it worked out well.
That's why the clients pay you the big bucks. You sweat so they can sleep and just relax by the pool.
There you go.
Of course, you're also pretty active outside of Apple in the old metals. A lot of activity going on in the metals. A lot of people talk about the metals these days as well, including our buddy Steve Sears over there at Barron's writing about the size open interest out there. In particular, I think it was the SLV Jan 2015 40s. He was saying. So he's saying, forget about the gold bugs. The silver bugs are back in action, particularly in the options realm. Do you concur with that consensus? Are you a diehard silver bug as well, or are you a little bit more shaken by recent events?
Well, with where I'm at right now, we don't have any hedged exposure in silver. We're just because basically if silver runs up like it had a run up a couple of years ago, I'm not going to be able to hedge it and catch that move. If it goes from like 20 to 40 in a day like it did a couple of years ago, that's too fast for what I'm trying to do. So I do have some clients in silver, but it's just just silver in and of itself. It's just underlying. And we got in probably around like the 17 or 18 level, somewhere around there. I forget the exact price. Different people got different prices, obviously. But I'm not doing anything just because it's not something that I can easily hedge. Now, I do have a couple of clients also that we're doing just like a basic bond replacement type hedge with silver, to where we're long the underlying and then short a covered call $1 above and then long a put $1 below 1 year out. And that's designed to be doing something in lieu of a bond. So we have that, but for the most part, not a ton of exposure to silver. With gold, basically, I'm rolling up the long puts and selling some put spreads, and I've actually sold a call spread on gold earlier this week, and so I'm right on the borderline. We'll see where that ends up tomorrow.
Yes, on the borderline. It's a good way to describe your trading in general there, Uncle Mike. Always on the edge. Live life on the edge or go home, right, sir?
Well, I'm kind of disappointed in Sebastian. He had two 80s reference opportunities there with Borderline. I thought he was going to start singing Madonna or Living on the Edge with Aerosmith. Seabass, what's up? Come on now.
Well, Living on the Edge would be the 90s.
Yeah, okay, you got me there. That's right. That is the 90s.
And I'm sorry, I don't do Madonna. I only do kind of early 80s stuff. So, I need something to be from like the Cars for really me to catch interest. So
I think Borderline was in 83, but you not singing Madonna.
No, you're probably right. You might be right. It's either 83 or 84, but that's also not really rock, right? who's listening to Madonna back then? It's not the Cars. It's not Rick Springfield. It's not. Basically, if there's not a dude lead singer, I don't care. Is really what it comes down to.
Fair enough.
So no Sinead O'Connor for you,
I
sir.
need business in the front and party in the rear. That's really what I need.
Give you Billy Ray Cyrus any day of the week, and you're a happy man.
Well, no, that's 90s as well.
But he
let's
meets the other descriptions.
There you go.
Or any hair metal band from the mid to late 80s.
Exactly. Give me Axl Rose, not the Rose.
All right, before we get the handful,
the Rose,
the handful of yes,
2 compliance guys in San Francisco have just had atrial fib.
Yeah, before we anger any more compliance fellows, as well as the 2 female listeners in our audience, we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. You know what time it is. It's time to parse the weird, the bizarre, the interesting, sometimes the downright stupid options activity that's lighting up the old tape. Today, we're going to kick things off with a good old Odd Block special. By that, I mean it's a little name that you probably haven't heard of. Trades $2. This is Mechel OAO. It's an ADR. Ticker symbol MTL. Closing today, $2.12. This is a name that does a whopping, actually not bad for an option, for an odd block perspective, about 1,900 contracts a day. But blowing the doors off that today, doing 62,000 contracts. Just a ton, no other way to describe it. A ton of contracts going up here in good old MTL. Looks like it went up essentially as a pretty size risk reversal. We saw 23,750 of the April 2 puts going up for about 20 cents. Total of 25,000 on the day. Those look like they were sellers, and that was there to finance the buying of some upside. And I use the term upside loosely because it's a 3-strike, but still upside. The 36,329 of the July 3 calls for a bunch of different prices from 15 cents all the way up to 24 or so cents. So he even got it for a credit there a little bit at the beginning. Went up pretty much in just several massive chunks. Went up as spread, but it looks like it's definitely all tied together as a bullish risk reversal. Sell put, buy call. No open interest to speak of on the April puts, so it's all opening. There is some size on the July 3s, about nearly 15,000. Even so, this would be over 2x that. So looks like a nice little size risk reversal. Someone wanting to take advantage of the options to get bullish on this name for a little bit longer term. And nice to see Mark. That someone is not just gobbling up upside for a change. They're actually using a little bit of nuance to put this stuff on. Would you concur?
Yeah, no, I mean, it's the one thing this show stands for is thinking about your directional play before you push the send button. And anytime we get somebody who's actually put some time and effort into coming up with something that's more efficient than a straight call, straight put, or even more ridiculous, the calls or puts that are 80% of the value of the stock, then I'm a happy camper.
Yeah, this one. Yeah, I usually poo-poo, and like Alex would, the trading of so much size on such a ridiculously small name because the stock is in and of itself an option, but I have to give them an extra bonus point for at least using the risk reversal, not just buying the calls. So.
Right, exactly. I mean, how often do you see like a tiny little baby stock and you see somebody walk in and basically pay 35% of the stock value price to get 6 months of exposure when they could just bought the stock?
Exactly. And, like I said, this is one of my favorite strategies, the bullish risk reversal. Seems to have fallen out of favor on the odd block here. It's good to see it's coming back a little bit again. That reaffirms my faith here in the options trading humanity.
Yeah, you know what it is that for a long time people have said, well, why would I even bother buying the call, right?
Yeah, they always have to kind of play the wait and see for the buy side. They'll sell the put all day. And they got to kind of wait. I think Andrews even said that on the show.
You want me to buy something?
Yeah, exactly.
Why would I do that?
I think that's your cohort's strategy for the risk reversal. Blast out the put and then let the momentum carry you into the call if you kind of have to, That's kind of his take on it as well. So I think it's you can call it the momentum risk reversal. All right, next up we have a good ticker symbol, actually. This is the E Commerce China Dangdang Inc. ADR, ticker symbol DANG. I like that one. Good thing Sebastian is muted right now because I'm sure he has some choice comments on that ticker symbol. But this is a name that closed today, $10.50, even up about a quarter or 2.5% on the day. A name that does about 2,600 contracts a day, doing about 15,000 of them today. And what we saw was going back to kind of the same old story. After I just lauded that last trader for actually using the puts, we go right back up to the old buying upside calls. In particular here, we see a little bit farther out, the March 12s going up. When we wrote it up, they went up 4,200 times for about splits, 52.5 cents, with open interest of about 4,000 contracts. So that could be closing, but then we saw pretty much 2x that again later on, so a total of 9,300 contracts on the day. They went up on splits, like I said. Open interest is not enough to cover it, so it's open in paper. This is a holding company for business-to-business commerce, e-commerce, I should say, over there in China. So it looks like, on the surface at least, this was buying, and this is your standard odd block. I love this. Got to get me some upside type trades. Senor Sebastian, A, was this you? Because I know you love China. And then B, do you concur?
I was not trading Dangdang Inc. In fact, you know what? I was trying to actually trade Gned Inc. And I just realized I'm dyslexic today.
Is that a relative of Gary Gnu Inc.? Yep.
But yeah, no, not a Dangdang Inc. guy, unfortunately. I wish I was.
I think you're going to add it to your.
I would go out of my way to make markets in that.
I think you're going to add it to your list after today. That's just too good of a ticker symbol.
It is.
You want to talk to the Swan guys about some Dangdang overlays? Might be some interest there.
Yeah, hey Randy, Candy, I need to talk to you about an overlay for Dangdang. I'd be interested to see how that one went over.
All right, and that is going to do it for the old odd block today. I think Dangdang takes the cake. I'm going to put that in my watch list for a while now because that one's just too good. And we're going to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what that music means. It is time once again for the Express Block, the portion of the show where the Viceroy takes the reins and leads us gently by the hand past the velvet ropes into the inner sanctum of Options Express and gives us a behind-the-scenes tour that you won't get anywhere else, listeners. So, Mr. Viceroy, jaunty cap on your head, what do you have in store for us today? I think you're going to get a litany of a lot of the usual names, like you said at the top of the show, but also a little bit of a sprinkling, a dabbling of some new in there as well.
Yeah, it's there are no chiming clocks or barking dogs here at OX. So it was an interesting day. It was a busy day. When I surveyed the desk, one of the comments I got was it was a lot like the weather. Kind of started out dark and snowy today and ended up sunny. But the names that were lighting up the tape today were just the classic names: Apple, Solar City, Facebook, Tesla, Priceline. And again, some of these moves are larger than life. The Priceline move today was just larger than life. But the desk was busy all day. The futures desk was a little quiet today. When I surveyed the futures desk to see if there were any standouts, their day had been much more of what I would call an ordinary day. Busy, but nothing really standing out or lighting up the tape. We're also a little light on crude because Traders Expo starts this weekend, and I'll talk a little bit more about that when we talk about what's upcoming. But nice market today. Rally continues. I continue to remain bullish. As I said on previous shows, I think we're going to see VIX getting back into the 12 area fairly quickly. Just be aware to everyone that Monday is a trading holiday. So if you're going to take stuff home tomorrow, realize you're going to take it home through Tuesday. And it was a good day overall.
Alex, I happen to have my OX account open while you were running down that list, sir, and I happened to just type in Solar City, as I am wont to do here, and just click on over to that trading patterns tool, because you know I can't get enough of this silly yet fun little tool, because it is quite actually insightful. And you're right, you hit the top five, most of the top five names that are correlated from an underlying perspective to Solar City. So number 1, you got Tesla Motors. Number 3, you got Facebook. Number 4 is Twitter. Number 5 is Apple. So you hit all those. You hit 4 of the top 5. I'm going to open it up to you guys now to guess the number 2 correlated underlying to people who traded Solar City on the OX platform. What was the number 2 thing they also traded? Alex, you want to go first, or should I open the floor to someone else first? Give you time to mull.
Solar City is the Tesla crowd. The Tesla crowd is the Twitter and Facebook crowd. So you did Facebook, so I would guess Twitter.
Didn't I say Twitter? I thought I said Twitter. Twitter's number 4.
Twitter or Facebook would be my whichever one you didn't say is my guess.
I'll run down the top 5 again for you so you guys all know, except for number 2. Tesla number 1, Facebook number 3, Twitter number 4, Apple number 5. So pretty much all Uncle Mike's names are already out. So number 2 is the outlier. Clearly, it caught my eye. So maybe you think a little bit outside the box. I'll let you think about it for a minute, Alex. I'll put Tusaw in the hot lights. Uncle Mike, give us your guess for the number 2 correlated underlying on OX today for people who are trading Solar City.
I'm going to go with USO if you were thinking outside the box.
Interesting. I will just say this. You are not correct, but you are in an interesting realm. I will leave it there. And that'll hopefully tee it up for Sebastian to knock it out of the park. You got 2 guesses now, Sebastian. You can follow up.
GLD.
You're going back the other way. You're still in the commodity realm, but you're going back the other way. So Tusaw is the warmest of the 3 so far, let me just say.
Okay.
I'll go even a little bit farther. It's not an equity. Aha.
Okay.
Now we're talking futures, so put that to work in your brains. Alex, you can get next guess.
The clues were too good. I'm going to guess net gas.
Can't put one over on you, Alex. Yes, the number 2 thing that Solar City traders were slinging on the OX platform today was the Nat Gas March future. I think that's really interesting. The other ones kind of fall right in line, but that kind of shows how, dare I say it, sexy Nat Gas has become, how retail-friendly it has become, B, and C, that the OX guys are really diving into the futures with gusto. You'd expect, I think, on a lot of retail-friendly platforms, it'd be some of these garbage, Nat Gas-type ETFs, but it's the big future right up there at number 2. I think that's kind of interesting for a number of reasons, hence the reason why I called it out here. And I know the listeners like this game, too, so I like to work it in every now and then. All right, and Alex, I know you guys are working on something. You can't really divulge too much yet, but give us a little bit of a tease of yet another interesting new tool you guys have coming down the pike over there at OX.
Yeah, we actually released internally today, which means the employees get to play with it and kind of run it up and down a bit before we release it to customers, of our IRIS product. And IRIS stands for Integrated Rapid Information System. And essentially what customers will begin seeing probably towards the very end of February, beginning of March, will be a new icon on the upper right-hand top of the page. and they'll get an introduction to Iris. Iris will be a consolidated information center where you'll be able to see all your trades, all your positions, program alerts, program messages if you've got orders working, but have them all in one place. And in fact, one of the team that developed it sits right next to me, and I looked at him a couple minutes ago and said, "You're coming on the show in March." And he said, "No, I'm not. I'll write you talking points." But the Iris feature should come late this month, beginning of March. Real interesting because it will consolidate all your messaging. So when you log on to an OX account, you'll actually have an icon that'll have a number in it. And you can click on it and you can see if the number represents messages relating to trades, limits, dividends, almost anything you want to program into it. So it's very cool. We released it to the test group, to the employees today. And Iris immediately sent out a message that said, "It's my birthday. Come get ice cream cake." And ice cream cake is, for me, always memorable. So we're very excited about it. We'll be talking more about it over the next coming weeks.
It is pretty cool, and you're right. It does get to an interesting use case on the site because you're right. You have to click around a little bit, go to different tabs to check different balances, check your order status, check things like that. In the mobile apps, you can do things a little bit more consolidated sometimes. But you're right. You do have to navigate around a little bit to get all that information. So if you can get all your fills and all the other whatever sounds like custom notifications you want in that one little panel when you log in, I think that'll be attractive for a lot of people who only have to have a few minutes when they log in to do something, you know? They ostensibly have lives and other jobs that they're doing. So you need to get that stuff front and center to them pretty quick.
Yeah, time is a more precious commodity than any of us realize until we run short of it. And I know that sounds like a cliche, but we talk a lot about the walk limit product, which essentially replicates what a savvy trader would do and works orders. And the feedback I've had from clients who use it saying not only does it save me money, but it saves me a considerable amount of time. And when you think about the value of time, if you've got multiple positions going into expirations, which are now every week, time is a very, very precious commodity.
Yeah, that may seem anathema here to us coming from the trading world who say, "What do you mean you don't have time to trade?" But people actually have lives and jobs, and they want to get in, get their trades, check their status, and get on with their day. And I think that's the kind of thing that can facilitate that process. Speaking of anathema, that must be my clue that it's time for the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, listeners, welcome to the mail block. As I've said many times before, no disrespect to anyone else here on the show, any other segment that we do, but this right here, every Thursday when we break open the mail block, is far and away my favorite part of the show because it's our chance to really interact with you guys, the listeners, and I get to hear what you guys want to talk about, what questions you have, what's on the top of your mind when you're listening to the old option block. And the reason I mentioned anathema earlier was because our first question comes in from a user who goes by the handle, I'm suppose, that is pronounced anathema. It could be anathrema. I hate this leet speak stuff, but c'est la vie. This question comes in from Mr. Anathema. It's a good one for you, Alex. He kind of teed it up for you here. He writes, how are option stops triggered? Is it the bid? Is it the ask? Is it the midpoint? If it's the ask, am I then filled on the bid, costing me the spread? Seems like it could be costly. Good question, Anathema. Gets actually to some of the underlying mechanics of how these orders work. And you're right. You want to work these stops. You want to have some sort of risk management, risk mitigation in place. And yet it sometimes is a toss-up how these things are actually triggered. Alex, I know you can speak to the OX experience. So how does OX handle these types of orders?
I'm going to give you a sort of a strange answer, but pretty much any way you want. You can trigger a stop based on quote. You can trigger a stop based on bid. You can trigger a stop based on ask. You can put a trailing in. So you have the flexibility to do kind of anything you want. I mean, the question from Anathema really sort of begs the issue of the fact that you want to do something more than a simple stop limit order, which would trigger a simple limit. And on the OX platform, you have the flexibility of customizing your stop. So the answer is yes to all of them. You can do it. One of the coolest features, I think, for users is the ability to trigger the stop based on the quote. So the answer is yes, you can do anything you want and try to shave what you give back on the bid-offer spread.
All right, I want to add something to this. One of the first presentations I ever did alone at Options Express, I was at an event, I think it was in Florida, and I'm doing this presentation, and I had a heckler in the audience. And the heckler he told me in front of everybody how I was going to jail and how I was really not doing a very good job and missing a lot of things. And well, it turned out my boss at the time had put this heckler up to it. And the heckler is actually my co-host today, and then later on he said, "Hey, don't take me too seriously. Your boss told me to do all this. I was put up to all this."
See, Alex, he's been throwing cold water on us for years, and we didn't even know it.
That's why his old boss doesn't work here anymore.
With that,
sorry, that wasn't fair.
With that in mind, that same heckler, someone asked the question. I have a question about stop losses. I never want to put in a stop loss because the market makers pick off your stop losses. And right away, I didn't even answer. That same heckler, the viceroy, had his head down. He was writing something down, probably writing notes about how I was going to get fired or something. Who knows? But with that, the second he heard that question, he just looked up and his eyes got very big. And I just said, "Mr. Jacobson, would you want to take this one?" Because I knew that was going to be one to where it was going to make for some great shows. So with that, Alex, what would you have to say? Because I still get people asking me this at times. Even I've been in the business 10 years now. People still ask me about this. Don't the market makers just see your stop losses and just pick those off all day?
No, market makers don't see them unless you put them in the exchange book, which almost no firm does. Not zero, but almost no firm does. But people will believe the conspiracy theories irrelevant of the facts. So no, they don't see the stops.
Got it. All right. I just wanted to clarify that one because I still get that question from time to time myself.
Yeah, I mean, if you look at the two pits left on the SIBO, the two active pits on the SIBO, the SPX and the VIX, even if the order is held by a floor broker, they cannot disclose the order to the crowd. It's a rule violation. And I know amongst conspiracy theorists that doesn't mean anything. But you realize today, I mean, I don't even remember how many options exchanges there are. I don't know if we're at 13 or 14 exchanges. It's very hard to get a sense if I'm a market maker, which means I'm sitting upstairs on a machine today, more likely than being on a trading floor, to get a sense of where the stops are.
Yeah, I think to add to that, the other thing that I would tell people too is that let's say you're trading a 10 lot on Microsoft and you're maybe, 50 cents away from where the market is on that specific call option or put option. Is the market maker really going to short or buy that many shares of Microsoft to move Microsoft that much, all the millions of dollars he's going to have to spend to manipulate the price of Microsoft just to pick off your 10 lot? So that was the other thing I would tell people.
Yeah, of course not. And the other thing I'll talk about, and I think we've kind of beat this to death, is realize before a market maker trades thousands of shares to try to move the stock, think about the fact that they already have, if it is Microsoft, a size market maker probably has millions of delta. And if they're going to move something around, keep in mind they're going to have to rehedge not just your trade, but their entire portfolio. And it's not economical.
I just want to say something now. After listening to the two of them basically say that market makers aren't out to get you, I was a market maker for about 10 years. Let me tell you, it was my goal every day to see how many individual retail customers I could screw over consistently. I never worried about the large block orders. When Goldman came in with 10,000 contracts, I always knew that was going to be a great trade. It was these tiny retail lots where, I had to work really hard to completely screw them over in order to make sure I made money on that trade, because the retail paper was where I consistently lost money every day, and I had to trade these big, large blocks just to try and make a buck.
Yeah, because when Goldman comes in and dumps 10,000 to you on the upside, that's always a winner.
Yeah, just to be clear, take what I just said, flip it around, and that's what I really meant.
Yeah, I don't think people get that. Market makers actually love retail flow. It's the one place you can actually make money. And it's usually sometimes at least two-sided.
Yeah. Like a market maker gives a flying crud about your 9-lot order.
And this is why there are so few market makers left, and why the independents are gone, and why they're big firms.
Yeah.
Yep, because the little guys pushed back and destroyed it all, Alex.
But it's nice to hear you admit to a felony, Mark. So
he busted you too, like he did me back in the day.
There you go.
Yeah, I would get some bail money ready.
Oh, I am. It's all that all that price manipulation I did. You Alex, you have no idea. We'd get these 1-lot orders that would be coming in, and the DPM just says, "Ooh, we got a 1-lot. Let's hold it. Everybody dump 10,000 shares of Microsoft, so this guy gets a crappy price." And then we do that. Then one person would get to buy that call, and then we'd all be racing to buy our stock back. It was unbelievable. The way we would just go out of our way to screw these 1-lot orders.
Isn't that how you guys filled your time out in whatever pitch does? We did that all the time out in Intel.
Oh, yeah.
Even in the S, we'd move spoos all the time just to screw a 1-lot. That's kind of how you do it.
I will get you out if it takes 20 years.
Yes, we got quite a few checklists for the Schwab compliance team on this episode. So let's keep on rolling to our next question. Before we dig the hole any further, this next question comes in from Mr. Snowbird. I'm going to go out on a limb and say he's writing from a nice, sunny, warm clime. At least I hope he is. This is a lengthy one, so put your listening ears on, fellows. He writes, "My friend and I like to buy straddles going into earnings, but we often miss a great deal of the move that occurs after the market close. I know you've discussed this in the past by referring to the process known as gamma scalping." He puts that in quotes. "I think I understand how it works. Basically trading stock against your options to lock in profits. But I'm cloudy on the mechanics," and he puts in parentheses, "FYI, I'm an OX customer." Well, there you go, Mr. Snowbird, ballyhoo for you. And he goes on to write, "Let's say I buy a straddle in my account with a 0 delta." And he puts in parentheses in case we weren't familiar with what he's talking about. "That's a 50 delta call and a 50 delta put for you guys playing the home game there." And he goes on to write, "Then let's say the underlying rallies after the close and my straddle now has a 50 delta. So the call has obviously increased in value, listeners, and the straddle now has a delta where it didn't before. I would then need to sell stock against that straddle to lock in my gains. But as far as the OX system is concerned, my straddle closed for the day with a 0 delta. Will the system will the system update with the after hours data to reflect the fact that my straddle now has a 50 delta? And if I sell short stock, I am essentially, quote, locking in a profit, as opposed to naked shorting the stock. I suppose the alternative is to simply keep a large amount of free capital in your account on the off chance that you need to trade some stock against your positions in the after hours. But that seems needlessly wasteful. Perhaps this is why you guys say, quote, gamma scalping is not viable for retail." Well, there's a lot of great grist for the mill in that question. I think maybe we'll start with the actual mechanics of how OX looks at that kind of stuff, Alex. If you could provide our friend Mr. Snowbird with some insight into how you handle those after-hour deltas.
So risk isn't here after hours, so it's just going to read the money line. So he kind of offered two choices. One was keep a lot of money in the account. The hedge isn't going to be recognized in the after-hours trading, so he's going to need a lot of money to do it. And then obviously the next morning he can call the trade desk and risk will adjust it, but the automated system is not going to recognize it in the after-hours session. He's going to need to have a lot of money in the account.
And again, unfortunately, you're right, Snowbird. That's one of the many reasons why we say gamma scalping. I'm not sure if it's not so much for retail. It's just very difficult for retail to do it. They can wrap their heads around the concept like you clearly and obviously did here, but the underlying systems just aren't in place from a margin perspective, from a capital perspective, from a even after hours risk and systems perspective to really make it a viable proposition for you. You know, when we were on the floor, we were running our vols and our deltas constantly. We had updated positions. We would know second and after hours when things were moving. We had runs of all our positions. We knew exactly what our Greeks were. We knew how many shares we had to get off to scalp something on the upside and then to buy it back on the downside. And of course, all of that was locked into our positions and to our haircuts. So we got all of our favorable margin treatment on that. We went through our normal brokers to do it. It was all a very smooth process for a market maker to do that. It's part of the business. But for retail to replicate that in your accounts, like we've just said, it really, unfortunately, for a lot of reasons, the functionality isn't really there. And also the margin just isn't there as well. So there you go. Good question, Mr. Snowbird. Long question, somewhat short answer, but kind of to the point. Good thing. Glad you listened to the show. Seems like you're obviously picking up the concepts. Stick with it. And I think it's a good idea just in general. Keep a little extra capital in your account for rainy days like that. I think Alex has said it before on the show. A lot of others have certainly said it. Don't trade to max margin every single day. You may want to leave yourself a little bit of wiggle room in case something like this does come to pass. All right, that's all the time we have for the mail block this week. I want to thank you guys who wrote in. If we didn't get to you this week, we'll get to you next week. You guys know the drill by now, how to reach us here on the show. Questions at theoptionsinsider.com. Of course, you can post a comment on the show notes for this program on the Options Insider. We'll, of course, route it to this show. Or find us on Twitter, twitter.com/options, facebook.com/theoptionsinsider. Or find us via our new mobile app and click on that very fun contact button there, a contact tab, and you can choose your way to get in touch with us, all of the above and much more. It makes it very, very easy to get to us right from the app itself. I know that stuff's really ready to go and working in the iOS version. It might be coming in a little bit on the Android and Amazon version. So if it's not there yet, just get us the old-fashioned way and maybe check back in like a week or two, and you'll have all that fun contact goodness in the app. But now we got to keep on rolling into our final segment, Around the Block.
Around the Block.
All right, welcome to Around the Block. This is, of course, the portion of the show where we prognosticate and pontificate upon the developments coming down the pike from an options and markets perspective. As Alex said earlier, this is indeed a holiday weekend here in the old market. So first off, no show on Monday, listeners. So you're not going to get your regular Tuesday episode. We get a little bit of a break here on the old option block. But secondly, that means if you're one of the premium sellers out there and you know you're out there, watch your levels. You're getting into the risk zone now where you're selling perhaps through the weekend into Tuesday's levels, and you don't really want to be doing that, particularly now the macro environment is very, shall we say, unstable. Anything could implode on a moment's notice over the weekend. You don't want to be giving away risk on Tuesday's levels for nothing. In fact, as we said many times in the show, maybe you want to consider buying something. Just putting it out there. We've got earnings season mostly trickling down, but we got a few names still to come. We got Groupon on the 20th. We got Hewlett-Packard on the 20th. Marriott for the hoteliers out there on the 19th, and Priceline on the 20th. So still a few big names yet to report, particularly on the tech scene. All right, Mr. Alex, we'll start with you. What are you watching for the rest of this week, sir?
I think you pretty much covered it. Still looking at macro issues, looking at the 10-year, looking at the VIX. But I think the fact that we flipped the calendar on January 1st didn't change as much as people think. I'm still shocked that the 10-year is well under the 3 area, so I think it's got room to run before it impacts the market. I said on one of the earlier shows, I'm also looking at the volatility of the 10-year in both the Japanese market and the German market, and both of them continue to be incredibly volatile, moving 2% a day. Today, the German 10 moved almost 3% a day. I think that's, goes to your point, Mark, that there are macro issues going on here, and there are still concerns about both the macro economy and the EU economy. We've passed the debt ceiling issue. We seem to have a degree of harmony in Washington, which I think bodes well. but that's also a comment that as soon as it's out of my mouth, I know tomorrow there's going to be a piece of news to prove me wrong. But looking at macro issues, and I think we're still going to move higher here.
And Senior Sebastian, what's on your radar as you're busy constructing overlays and educating clients?
Yeah, I'm just looking at the market, and I'm seeing the VIX really not react. I think we're, at least in the near term, getting a little toppy. So Alex and I have a trade.
I like it. Breaking out the technical terms here today. Toppy. That's a good one.
There you go.
All right. And last but certainly not least, Uncle Mike Tusaw, take us home, sir. What do you keep an eye on for the rest of this week into the long holiday weekend?
We may have a shot tomorrow at making new all-time highs. We'll have to have a really big update to do it, but we do have a shot at making new all-time highs in the S&P, and I've said it before, and I'm going to start saying it again. It's a fun thing to say. Never in before in the history of the entire stock market has there been a better time to sell than right now, if indeed we do make new all-time highs. Now, with that being said, I do want to add I'm also bullish on the marketplace, but with that in mind, be careful out there, folks, like they say on Hill Street Blues.
So 1 vote for Toppy and 2 coming in on perhaps a little bit more upside to go. So we have a little bit of a market here. I like it. All right, and that is going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, let me check in with my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you. Let's start in the pit land today. Senior Sebastian, what's cooking in the land of the pit?
Well, we should be having a new set of curriculum coming out in the next week or so. And, we got a few webinars. Just go to optionpit.com/events and follow. And, if you haven't, just go take a gander at swanwealthadvisors.com. It's always worth checking out. At some point, we've got some new photography going up there.
And that's the place they should go to get those quotes on the Dangdang overlays, right?
There you go.
All right. And Uncle Mike Tusaw, what is coming down the pike on the old webinar train?
Well, tonight we're going to be taping the ratio spread webinar. We're excited about that. And then, so for those of you that didn't get to see it last night, if you're listening to this show on Friday, head to rcmwealthadvisors.com/webinars, and you'll be able to see the recording of it. And then in a couple weeks, on the 27th, we're going to have a webinar on the Condor. We're excited about that. And then after that, on Tuesday the 4th, we have Mr. Mark Sebastian coming to speak with us on the dangers of the credit spread. So tune in. We have a lot going on.
Shucks, I thought he was going to talk about Dangdang overlays. I think there's a market there, sir.
I think we should.
The title alone is going to get you at least 10 people.
I'd go to something like that. I want to see what that
maybe
is.
15. All right. And last but certainly not least, Mr. Alex, what is coming up in the land of OX education?
Well, first and foremost, Traders Expo in New York City. The crew is out there. Traders Expo, for those of you who may not be familiar with it, is a large, actually they're called money shows. And Schwab is a big sponsor of it. There will be an OX booth out there. And Nina, who's our director of education, gets on a plane in a little bit, runs from the 16th to the 18th. It's at the Marriott Times Square in New York City. Many of the events are free. Some of them aren't. But if you want to go into the large events, there are a handful of terrific option people there. There are a handful of great TA people there. Generally, they're decent events, great bling and stuff you can pick up. But that starts Sunday and runs through Tuesday. Also Tuesday, looking at some of the webinars, futures trading on Tuesday, Bollinger Bands on Tuesday. Wednesday, we're doing a site tour, the updated features of the site. And also on Wednesday, Jim Bittman from the SIBO is coming over to do a webinar on diagonals. Jim was my bank officer when I hired him at the Options Institute. So diagonals always an interesting topic, but there's a full webinar schedule. Just come to the site, optionsexpress.com. All the events are free. And there's, as I say, a full pattern of educational events.
So you're the one responsible for the options plague known as Jim Bittman. I'll have to remember that.
Yeah, and you know what? That's the nicest thing I've ever heard him called.
Just kidding. We like the stuff they do over there at the Options Institute. Check it out if you haven't done so already. And on behalf of the Viceroy and Uncle Mike and indeed the Greasy Meatball and, of course, myself, let me thank all of you out there in the listening audience for downloading and streaming and subscribing, for sending in such great questions. Keep it up. Don't forget to check out the mobile app, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.